And tonight we have with us, we have Aaron, Jennifer, Lucas, and Diane, and they're going to share with us some processes and perspectives on how to buy a house in 2021. So I'm gonna pass it over to Amy now. And with that, go ahead and take it away.
All right, thank you everyone for joining us. My name is Amy Kuster. I also work here at the Skokie Public Library, and I'm going to be a little bit of a moderator for our panel and Q&A this evening. So just a heads up, we are recording this event so that folks who couldn't be here are able to watch it. And also if you're just like mind blown how much information is shared and you want to come back rather than scribble down notes, you will have that option. So what we're going to do to start off with is we're going to have some introductions from our four panelists and then an overview of each of their roles in the home buying process. And then we're going to close with a Q&A period. So we do have some ready to go questions that folks submitted when they registered. But if you have any questions throughout the presentation tonight, please go ahead and put them in the chat and I will be adding them to the list to do when we get to the Q&A portion. So we want this to be as useful and informative for all of you as possible. So whatever your questions, let us know. And with that, I'm just going to first have all of our four panelists do a brief introduction of themselves. So Aaron, do you want to introduce yourself?
Yeah, my name's Aaron Masliansky. I am a realtor at Dreamtown Realty in Evanston, and I'm a Skokie resident, and I love the Skokie Public Library, so thrilled to be here.
Excellent. Well, we're thrilled to have you. Jennifer, do you want to introduce yourself?
Yes, I am Jennifer Goldstone. I am a partner at a boutique real estate firm called Horwitch, Goldstone, and Shaw. And I've been doing different things in real estate for about 22 years. And I'm happy to share or answer any questions that come up.
Marvelous, thank you. Lucas, can you introduce yourself, please?
Of course. I'm Lucas Weigle with True Home Inspections, based out of Arlington Heights. I live in Arlington Heights as well. And I've owned my home inspection business for 7 years now. And before that, had a contracting background.
Okay, excellent. And I like the branded fleece there. Perfect for a cold May evening. And Diane, can you introduce yourself, please?
Sure. Hi, everyone. I'm Diane Falk. I am a residential lender with First Midwest Bank. I cover several branches, but the main one is at the corner of Cumberland and Higgins. But I can go anywhere, lend anywhere pretty much, including 46 states. I live in Hoffman Estates, and I have been in the mortgage business for 36 years.
All right, excellent. Well, as you can see from the introductions, we've got a wealth of experience, and we're going to go through buying a home from a realty perspective, legal, inspector, and lending perspective. So all of the steps of this process, you'll get some information. So to kick it off, we're going to go back to Aaron, and he's going to give us an overview from a realtor's perspective, what you need to know.
Thank you, Amy. So the home buying experience is something else for sure this year. So the key to it is being prepared, because while many people thought that the pandemic would slow things down, it's actually just really made people realize how much home is important to them and what space needs they have and whatnot. So there's been a complete recalibration of real estate, really. So that's what's been going on here in the market in 2021. So to get ready and to be able to succeed at getting the home that you want, the first step is to talk to a realtor. And you have a meeting, and for what I do, I like to have a discussion, find out what, to get to know my clients and talk about how the process works, how real estate agency works, how I represent people, and what the expectations are. And then, answer any of the relevant questions and then find out exactly what you need. Then the key is to figure out, okay, how much can you afford? So if you are getting a mortgage, it's a great idea to start off with speaking with a lender. So for instance, if you were to call Diane, she'll run through a credit report, find out exactly what your financial capabilities are. If there's anything that needs to be fixed with your credit, it's a good opportunity to look at it. It doesn't cost you anything. And it gives you the confidence that you need in order to be able to go and make that purchase. So you'll get what's called a pre-approval letter, which is something that you'll need when you make an offer to in the process to a seller in order to show that you're financially qualified. So that's like step two, because step one is meeting with the realtor. Step two, talking with the lender. Then it's all about seeing places, trying to be very, very quick to get out and see the homes that you think are a good fit for you, and going out with your realtor to look at that. One of the things that I do when I'm going and looking at a home is, besides just opening the door and showing you how great and beautiful the hardwood floors are, it's really to take a look at the property itself. And it's not an inspection by any means, but it's just like pointing out if I see something like, okay, that furnace is really old, like you should budget for that. Or like the kitchen is a great space as compared to what else is in the marketplace. Just really, getting an idea and good information beforehand. Then when you're ready to make the offer, the realtor would, fills out a contract, goes over all the terms of the contract, and tries to figure out different ways to make it successful for you. And one of the things I do is I do a market analysis for everybody who is looking to purchase a home. And when they identify it, so you know kind of what the market value is. The market values are shifting a lot right now, so it's kind of hard to ascertain. But you'll have the relevant data in order to be able to go in and negotiate. Once a contract is accepted, then the next step is what's called the attorney review inspection period. It's typically 5 business days. And in that time, you're going to have an inspector come out. The inspector is going to look at everything, and Lucas will talk about this in more detail. Your attorney is going to review the contract and make suggestions to make it more protective for you as a buyer, and just help you through the process, because it can get a little complicated, but if you have good people working behind you, it goes very smoothly. Once that process is done, basically you work with your lender to get all the documents that they need. And finally, you close. You go to a title company where they give you what's called a title insurance policy, which protects your ownership rights. And you'll sign, a stack of documents this high. You'll have to do some stretches with your wrist. At the end of the day, you are a little bit lighter in the pocketbook, but you've got a set of keys and you've got a home. So that's kind of like the big picture overview, 50,000 feet look at it. But I will pass it back to you, Amy.
All right, excellent. That's a great way to kick it off. And you mentioned all of the different steps and people that you would interact with when you're in this process. So next we wanted to go over to Jennifer and get the attorney's point of view on what the attorney's role is, how they're supporting the buyer, what you should be aware of.
Thank you. Erin, that was a great overview. So thank you for starting us off. I get involved after the contract is signed. It's a little bit unusual. Some people are uncomfortable with that because you're signing a contract before you reach out to your attorney. But once the contract is signed, as Erin mentioned, you get this 5 business day attorney review that runs simultaneous with a 5 business day inspection period. So the way I look at it from my perspective is I like to schedule a time to talk after you've done your inspection, to go through whatever came up that way, strategize with you on how we're going to deal with the conditions that Lucas finds. And then I add in any sort of legal concerns that I have that are in the form contract or that have come up in particular with the property you're looking at, whether it's a condo or a single family home or part of an association. All that stuff goes into those kinds of discussions. After we have that call, I put together my attorney letter. I send out those requests to the other side. We go back and forth a little bit, and we hop on calls as needed. And a lot of them happen via Zoom now. It used to always be a conference call. I'd say in 2020 and 2021, we've turned those into, majority of them are Zoom calls now. So it's kind of nice to make that online connection from the beginning. Like I said, they used to all be conference calls or via email. And so it's kind of nice that we have this technology to do that. Once that's attorney review and inspection periods are completed, then it's kind of, I take a back seat and we move on to Diane. And Diane then will get all your W-2s and your tax returns and all that stuff she needs to do to get borrower approved. What people forget about, and I'll let Diane talk about this too, is that the loan process is really two parts. It's one, approving the borrower, but it's also approving the property. And so we have appraisal concerns in a market like 2021 because the market is moving very fast. It's a seller's market right now, and purchase prices are going up quickly. And so now we're running into some appraisal concerns. I'm seeing more and more of those in 2021 than I did in the past. And when you have a good team behind you, like a good realtor and like a good lawyer and a good mortgage broker, we can work together to do what's best for you as the borrower or buyer under those circumstances. Once the loan is approved, then we move to the closing piece. And that's on a buy where I really add value because I go through that process with you at the title company. I'm either there in person with you, or in 2020 and 2021, we've been doing it via Zoom. There's been limited because there's no way to social distance in a closing room. And so there's been, the title companies have limited how many people come to the closings. And therefore, now I'm just starting to go back. If my clients are vaccinated and I'm fully vaccinated, I will sit with you in a room. If you're not vaccinated or not comfortable with that, then I do it via Zoom. And the way that happens is the title companies email me all the closing documents. I'm on your laptop in a Zoom. I share my screen with you. I go over things page by page as if I was in the room with you. I even have full conversations with the closers and the other people in the room, even though I'm not physically in the room, it's all electronic now. And that works out beautifully. And I've been doing that for over a year, and people are pretty comfortable. My goal at the end of the closing is that you understand what's going on with the finances, with the loan terms, which you probably already have a little bit of a handle on that by the time you walk in that door, and that you're just comfortable with the whole transaction. And hopefully at the end of that hour and a half with me, you get your keys, seller gets their money, and everybody's happy. So that's kind of that's my perspective of how things go.
All right. So I'm really glad, Jennifer, that you brought up like what it looks like with pandemic safety precautions. Because yeah, I've heard a number of people asking those questions about like what's in person, what's not. And so I want to pivot over to Lucas right now for a piece that has to happen in person. At least I'm assuming so, correct me if I'm wrong, but what does that inspection look like? What are the things that a buyer needs to know? Lucas?
Yeah, so going through the home inspection process and purchasing a property right now is just really, really busy right now. I'm sure we can all agree. We've never seen it busier than it is right now. So you really need to call a home inspector as soon as your offer is accepted on your property, and then you'll have your 5 business day for attorney review. In Illinois, it is required to be a licensed home inspector, so you can't have an uncle or a contractor friend go through the inspection process. They're more than welcome to walk through it, but for a legal home inspection document, they do need to be licensed, and that's not required in all states, like for Michigan, for instance. So that is something that you're looking for when you hire a home inspector. The other thing too is that it's really a team aspect when you're going through this process. And I don't think a lot of people understand that 95% of my business is all realtor referrals. And there is a code of ethics that no home inspector should cross. And typically realtors will give out a few home inspection recommendations. You could always go off on your own and find your own home inspector. But I'm always surprised when someone does do that, because you're working with a team of people, home inspector, attorneys, lenders, and these people are here to help you through that process. And hopefully you should trust these people, guide you through this process. And as a home inspector, it's really my objective to give you as much information about the property as possible. And there is a standards of practice that has to be met by all home inspectors. And there's a couple organizations that exceed that minimum state required standards of practice. And those would be inspectors that inspect to what's called an ASHI standard. It's the American Society of Home Inspectors, and then InterNACHI. Those tend to be the 2 larger organizations that will exceed state minimum requirements. So if you were to go off on your own and try to hire a home inspector, I usually recommend that people look for some of these certifications just to show that that home inspector is obviously exceeding the minimum requirements. As far as the standards of practice, I'm just go over because it's really covers a lot through the home inspection process. But the home inspection will cover the roof, the exterior, the structure, the electrical system, the heating, air conditioning, plumbing, interior, and insulation. And those are obviously very broad areas of the house. They really do go into pretty big detail through the home inspection process. The process itself, as far as like an on-site home inspection, would typically take, I think, about 2 hours, 2.5. What we're seeing, or what I'm seeing, and what I do, I'm a multiple inspector company where I have other inspectors that work for me as well. So usually it's 2 inspectors on each inspection. So we're getting through inspections a little bit faster because we have 2, sets of eyes. We're able to divide and get through the inspection process. And I'm seeing a lot that happen a little bit more with other companies as well, to kind of get in, get the inspection taken care of, and then get the home inspection report, which is typically emailed through like a PDF or through home inspection software companies. Typically, my company will do same day report writing. I feel that most companies should be doing this. The day that you book your home inspection, you should typically get the finished home inspection report. Most people that I'm networked with in the industry, that's just kind of a given. That's how we handle our process. But legally, you are allowed 2 business days to get that home inspection report out. I very rarely hear anybody taking 2 days. And I think any attorney and realtor would be like, come on, with 5 days in the process, you're really trying to get this information in a pretty timely manner. Another thing, other than the home inspection process, just to touch base on briefly, is radon testing. Radon is becoming more common to test for during the real estate transaction. I would say 50-50. My clients will book radon, a little bit more actually. And if you have questions about that, I can dive into it a little bit later, or you can jump online and just like Google radon for that specific area, because it is prevalent in some neighborhoods more than others. The other thing that I was just going to recommend briefly is home inspection fees are all over the place. There's the cheap guy, there's the expensive guy, and everyone in the middle. One thing that I always recommend to people interviewing or going through the inspection process is to make sure that their home inspector is insured. That is not required in the state of Illinois, which I'm surprised. So you want to make sure that you're protected as a purchaser, that your home inspection company is not cutting corners on the insurance side, because it saves you quite a bit. So one thing to kind of look into when you're going through the inspection process. I look forward to answering any questions, probably in a little bit more detail. It was a pretty broad in a nutshell. So thanks.
All right, thank you, Lucas. And so now to kind of round out our overview before we get to the Q&A, I want to go to Diane. Before Diane starts chatting, just a reminder, any questions that you've been thinking about in these first 3 overviews, go ahead and put them in the chat and I will note them down and we'll make sure to get them in the Q&A. But now let's go to Diane and hear the lender perspective.
Okay, so a lot of my business too is by referral and comes from realtors and accountants and attorneys, and a lot of it, because I work from a bank, comes internally, and a lot from past clients too. But one of the things I recommend to everyone, even before you talk to a realtor, is pull your own credit. And people should be doing that every year. You can go to annualcreditreport.com. You're allowed to pull your credit once a year for free. And from what I've read, there's something like 15 to 20% of credit reports that have errors. And sometimes it can take 30, 60, 90 days to correct things. So you don't want to be find the house that you really want and then realize that, oh, something got messed up on your credit report and now it's going to take you 90 days to fix and that house is going to be gone. So do that first. It's free. You can do it once a year. If you want to get your scores, you typically have to pay, but I think it's like $10 or $15. Understand though that everyone has numerous different credit scores. So if you were to go on the same day and have your credit pulled for a new car, a new home, and a Kohl's credit card, you're going to get 3 different scores, because there's different statistical models for all those levels of risk. So Credit Karma, your American Express card, your Visa card, all those things will give you kind of indicators. And so that will give you a sense of where your credit score is, but it may not be exact. So that's one thing you should be doing every year, and presumably before you even start looking for a house. And I'm just going to kind of run through my top 10 do's and don'ts during the process. And then again, you're welcome to ask questions afterwards. But also when you start looking, make sure you start collecting your documents. You're going to need 30 days pay stubs, 2 years W-2s, 2 months bank statements, and you need all pages. Even if that last page says this page intentionally left blank, if it's got a number on it, the underwriter's going to ask for it. And so many times people have told me, oh, well, I shred my pay stubs as soon as I see them, or I shred my bank statements as soon as I balance my checkbook. And then again, it's harder to gather all those things, you know, if you've already shredded them. You have to go online, you have to try to find them. So W-2s, pay stubs, bank statements, tax returns. If you have any income that is other than regular W-2 pay stub, an underwriter's going to ask for your tax returns. If you're self-employed, especially, you're going to need both business and personal tax returns. Once you get to the point that you're going to go and get a pre-approval and start talking to a lender, it's definitely fine to shop around, but don't have multiple lenders pull your credit. Every time there's a hard credit pull, that's going to affect your score. And I know there's kind of a sense out there that if you're doing that all within a short period of time, that it won't affect your score, but I've seen it happen. So certainly shop around, find somebody who you're comfortable with, who you feel, you know, that you click with, but only have one lender pull your score. Once you know what your scores are, you can certainly shop around for, you know, rates and fees and things like that, but just don't have a bunch of people pulling your credit. The same thing goes for your realtor. Don't go to a bunch of open houses and talk to like 15 different realtors. Find one person, you know, and stick with them, you know, as both Jennifer and Lucas said, and I think Aaron said too, you know, it's a team that's working together. Do not open or close any credit cards. Don't move money around from one account to the other. Don't buy furniture. It's very tempting. You've got this new house and 2 weeks before the closing, there's a big sale at, you know, Walter E. Smith, and it's, you know, 12 months with no interest. Don't do it, okay? Because every lender 2 or 3 days prior to closing is going to do what's called a soft pull on your credit report. Then if you've got additional debt, even if Walter E. Smith says there's no interest for 12 months, that underwriter is going to put in a payment. And if your debt ratio is tight, that could all of a sudden, you know, put you over the edge. I've had people buy a new car during the process. Not a good thing either. So don't do anything. Don't open anything. Don't close anything. Don't increase your balances. That lender's going to pull your credit report at the beginning, and we use only the minimum payments on your credit cards. So even if you pay everything off every month, for our debt ratio calculation purposes, we're only using the minimum payment. But if you usually have, you know, I don't know, $2,000 on your MasterCard and now you've just run it up to 10, that's going to change your payment and therefore your debt ratio. Don't make any large or unverifiable deposits. So if you've been saving money in cash in your safe deposit box or your mattress, get that into your account well before you're going to go buy a house, okay? The underwriter is going to look at the prior 2 months bank statements, and any deposit that is not payroll is going to have to be sourced. They're going to want to know where it came from. If you sold, if you had a big garage sale, if you got married and got a lot of cash as wedding gifts, all those things the underwriter is going to question. Now, if it was, I've seen it with, for example, a wedding, usually they're a little bit flexible with that because people do get a lot of cash coming in and you can kind of tie that back. But let's say you sold an extra car or you sold some furniture or something. If you can't trace that with like a bill of sale or with something else, the underwriter is probably going to exclude those funds from what are verifiable, okay? don't change employment. I've actually had that happen too. I had someone who, a firefighter actually in Chicago, who retired during the process and didn't tell me he retired. And of course, when the processor went to verify employment, they said, oh, he doesn't work here anymore, he's retired. The underwriter actually was about to refer him to the fraud department, which is not a good thing. But in his mind, he was getting more net income from his pension than he was getting when he worked. So he didn't see why this was a problem. But again, we use gross income, we don't use your net income. So that was the problem. So don't change jobs, don't quit your job, don't start a business right beforehand. Because especially self-employed, we need to have a 2-year history of self-employment. And this goes back to Aaron and Jennifer too in the contract. Don't put any personal property on the contract. That's underwriters go crazy over that. We don't want to see that there's anything that's not affixed to the house that's being transferred. So if they're leaving all the furniture or they're leaving whatever, you want to take care of that with a side bill of sale. You know, even if they're throwing it in for nothing, just put it on kind of a side bill of sale. I don't care if you say that you're buying it for $20, whatever, just kind of keep that off the contract. Keep copies of everything. Keep copies of your earnest money checks. Keep copies of any addendums to the contract. If you're doing a, if you're working with a first-time home buyer down payment assistance program, you're going to have the certificate for the homeowner and education certificate. Floodplain, and this is, you know, your realtor will look at this too. You know, if the property's in a floodplain, you're going to be required to have flood insurance. That can be expensive, and again, you've got to take that into account when you're looking at your whole payment and your debt ratio. And same thing with your regular homeowner's insurance. You'll have to pay the first year's premium prior to closing. And then if you're escrowing, you'll be escrowing 1/12 every month for when the bill comes due again in a year. But that's an expense, and the underwriter is going to want to see that so that we know exactly how much your total payment's going to be: principal, interest, taxes, and insurance. And then the last thing I wanted to say, especially with COVID, and Jennifer mentioned this too, with this kind of crazy market and people bidding over list and the appraisal issues, appraisers are looking at the past. They're not looking at where the market is at this minute. They're looking at what's closed in the last 6 months. And so that's why there's these appraisal issues coming up. And a lender will calculate the loan to value on your loan with the lesser of either the appraisal or the purchase price. So if the purchase price is, you know, $300,000, but the appraisal comes in at $250,000, you're going to have to come up with that additional money. And if you don't have it, then obviously that's going to be a problem. So that's where your realtor, as Aaron was saying, he's going to do a market analysis so that you're not bidding so much over the market that there's a risk of the appraisal. And I think those were all my things. You know, my goal is always to have a conditional approval come out with basically no conditions other than that final employment verification and appraisal. So we send our, when a loan comes in, all the disclosures are sent out electronically. You upload all your documents. Everything goes right to underwriting, and we get a conditional approval while we wait for the appraisal and while we wait for the title commitment. So if you've got all your documents set, everything's in, everything's prepared, then we should get an approval that is subject only to title, appraisal, and the final employment verification. And that's what you really want to see, because then everybody is unstressed. And that's it.
As unstressed as you're going to be in a really big decision and purchase, right? Yeah, excellent. That's great, Diane. So Diane, I do want to jump right into a question that came in the chat for you that is related to some of the pieces you were talking about. And so one of our attendees asked, what would you do if you have multiple checking, savings, and money market accounts, so multiple accounts that you're planning to use for closing? Does that change anything?
A little bit. A lender is not going to ask for all of your bank statements from all of your accounts. Basically, we just need to verify what you need to cover the down payment and the closing costs. And then for certain things, there's also a requirement to have so many months of payment reserves. So let's say you've got college funds set up for your kids. We don't need those statements. You know, it's for most people, it's going to be your basic checking account because that's where your payroll goes in, your basic savings account, and maybe your money market account. Sometimes we're looking for the 401k statements if somebody's doing a 401k loan as part of their down payment. But otherwise it should be pretty basic. But then don't move things around. You know, if you're going to move money from savings to checking to pay earnest money, that's fine. As long as we've got those two statements and we can see that money being moved, then we're fine. It's just, I've sometimes had people that are constantly moving money back and forth between savings and checking, and it makes underwriters crazy.
All right, good advice. So, all right, just a reminder, if anyone in attendance has questions, feel free to put them in the chat. Otherwise, I'm going to start digging into the questions, including ones that we got from folks as they registered. So this one, had a couple of people ask, like, what is the timeline from start to finish? And specifically, someone asked, maybe this is one for you, Erin, of when should I call a realtor if I've mostly been browsing listings online so far? Like, once I call you, how fast is it going to go? So like, how ready do I need to be?
Well, I would say that, you know, everyone looks at Zillow. I mean, if anyone watched the SNL skit about how people look at Zillow, I know how it is. But I would say once you're serious and you're like, okay, let's do this, call a realtor. And the process, I mean, it can be very quick. I've had people where, you know, as an example, it might be, okay, let's go out on Monday. We go see a few places and one of them hits and that's it. You write a contract, and depending if you're getting a loan or paying cash, like you could be closing in as fast as 2 weeks. It could be, you know, 30 to 45 days. I would say if you're getting a loan, a typical closing time might be 30 to 45 days right now. So it really depends on like how many houses there are or condos that are within what you're looking for. And if you find something that is going to fit you. The other thing is being able to win offers if there's multiple offers on a certain property. So sometimes you might go through several properties where you're making offers until you actually get your offer accepted. It can be very frustrating, but it's just, you know, just have confidence that you will get there, and just try to use the tools and methods that your realtor can bring up to help.
Yeah, excellent. That got another question that had come in, which is someone saying, you know, I've heard from friends or family members that they've bid on multiple houses and lost because they didn't act quickly enough. So we did have a question that came in, is this a slower period to sell a house because of the pandemic? So I know all four of you can speak to like, no. So anything you want to say about that?
I mean, I would say that, you know, a year ago, I didn't know what was going to be. Nobody did. And, you know, everyone was worried that there were going to be a lot of foreclosures, thought everyone was going to lose their jobs. But what's really happened is that for people who kept working, they were able to save their money, and the house became more valuable. So things, and a lot of people have not put their house on the market because they're worried about, number one, catching COVID, number two, finding another place to go to. So it kind of choked up the marketplace. So here you have all this demand and not enough inventory. Now the inventory is starting to grow a little bit because people are hearing these stories about how much money people are selling their houses for. And they're like, well, maybe I should do that. And then that starts to move up the chain. But it is fast and furious. You almost have to know before a house goes on the market. Sometimes there's what's called a private listing network, where a lot of times realtors will list a property on this part of the multiple listing service, which is the database that all the realtors put the listings in. You could find out, things that are coming on the private listing network beforehand. Sometimes you might be able to get in. There's still multiple offers in those types of situations. Personally, I'm not even recommending people put things in the private listing network right now, because there's so much demand that it's better just to put it on the public market. And it's better to get the full marketplace looking at it and getting as many offers as you can and picking the best one, rather than trying to limit the pool. And I also think that there's an equity type of discussion that takes place with putting what's called a pocket listing. And this is, a big, obviously, it's been a big deal in discussions over the past year. But when you keep things as a pocket listing and you don't fully market it, it can be construed as potentially discriminatory. So I think it's better to put it out there for the whole public and let the best offer win.
Yeah, okay. That's really good context for like the different types of listings and what's happening right now. Jennifer, I'm wondering if you have anything to add in there, both about like the timeline and then the piece about like making sure that the process is above board, that there isn't anything discriminatory going on.
I haven't experienced any of the discriminatory. I shouldn't say that. In my recent past, I haven't experienced any real discriminatory issues. I think that the hardest challenge for me when we're in this kind of market where you are having multiple offers on every property that's, or a lot of the properties that are priced appropriately. For me, it's how do I protect my clients when Lucas finds that the roof is leaking and the seller's like, I got 5 offers. I don't really care if you want this house or not. I'm not fixing the roof. Now, how do I protect my clients for the deficiencies that were found in the inspection? And at the same time, they want to buy the house, but yet, so it's a real give and pull. It's a real pull and take, and it's all, one of my inspection calls I did just today, my client's like, there's nothing that's going to stand in the way. But it's a 3-unit condo association. They have a lot of maintenance coming up. And I don't know how that's going to play out, but we didn't ask for any credits. We didn't ask for anything, any escrows or anything to cover in case of a problem down the pipeline. And I think that it's happening more and more. We have as-is contracts coming in, and Aaron, I don't know if it makes sense to speak to escalation clauses. I'm seeing more and more of those come in because you want to put your best foot forward. It becomes really important to talk to Diane early, because like what she's saying, if you can get your stuff, all your paperwork in order, maybe you can close sooner. Maybe you can get an appraisal waiver. I mean, I'm seeing all these different things come in, but for me, the challenge is, how do I protect my clients in a market that's moving so fast? And that's really what I try to focus on.
Okay, excellent. Yeah. So I've seen 2 questions come up in the chat. So Jennifer, since you were just speaking on this one, under what conditions would you get your earnest money back, and when would you not, depending on, I'm assuming, if a sale goes through or not?
Okay, so getting your earnest money back, it depends on what contingencies are open at the time you want to terminate the contract. During the attorney review process and during the inspection, if we're negotiating in good faith, trying to strategize on or try to negotiate on, I keep using the roof, but maybe it's a water heater, maybe it's the furnace. I don't know what the issue is. And we're negotiating in good faith on that, and we just reach an impasse and we can't reach agreement, then we're going to send a letter that says we didn't reach agreement. We're terminating under inspection and attorney review, and you get your money back. If your loan doesn't come through and there is a mortgage contingency still in place under the contract, you generally get your money back. But if those contingencies aren't open anymore, so attorney review is closed, inspection is closed, you've waived your mortgage contingency, you've waived any appraisal contingency, then you have I call it your earnest money's at risk. There is a misnomer in the real estate world that the only thing the buyer has to lose is the amount of the earnest money. Well, that's just not the case. I have seen it. I have read case law where more than the earnest money is the damages. So to the seller, maybe not in this market because they're going to be able to sell right away again, but it's not just a limited amount. It's not your damages are not limited to the amounts of the earnest money. But as long as there are contingencies open under the contract, and those are things that we calendar and we watch very carefully, then you terminate legitimately under the contract, you can get your earnest money back. If the contingencies are waived or passed or satisfied, then there is not a way to get that money back.
So all of this just making super clear how important it is to really think about all of you as the team, like to support in this process. So I saw a question come through as well, that is, what are the top 3 to 5 things that you would recommend someone who's looking to put their home on the market soon do to get it in order? So yeah, who wants to jump in with that?
I certainly can. I think, number one, the person you should have come into your house first, I would say, is the realtor, and kind of take a look at a holistic view of the house and kind of take a look at what is going to help it sell. Some people like to do what's called a pre-listing inspection, where Lucas could come in and take a look to see what things should be repaired. I just caution people that they should only do that if they plan to do whatever the inspector says to do, because if you have knowledge of something that's broken and you don't fix it or you don't disclose it, then you're going to be talking to Jennifer a lot more. But I think the things that really have a return on investment are cleaning, decluttering, organizing, staging, painting, and repairing anything that you know is broken. I think that's the key. But I don't recommend people typically redo a bathroom or a kitchen or things like that, because unless you're a contractor, because you're probably not going to get the money back on that. But if you could do cosmetic things to make it look good and clean it up, that's very, very important. I wonder if if Lucas, what your opinion is on like a pre-listing inspection.
Yeah, I usually talk myself out of business when it comes to that. And then my first question is usually, have you talked to a realtor or an agent? I think more agents are advising, it's not necessary. And I usually tell my clients, even if you go through a pre-inspection, the buyers are going to go through their inspection process as well. So they're going to be finding things. I think the money spent on a pre-inspection would be stronger suited for like a home warranty, which is roughly the same cost. And then that way you're selling your house a little bit stronger in regard to, you're giving the buyers a 1-year, home warranty, as opposed to a pre-inspection, which nobody really trusts anyways. So I usually talk myself out of them. In the home inspection industry, a lot of people are, talking about this, revenue that can be gained. But as my company, we're not really interested in it. And I usually ask, I'm like, you should talk to an agent first. Yeah.
Okay.
I would add one other thing to what Erin was saying, is that the only other thing I will add is that when you get to the attorney review process and there are inspection issues that you are aware of, and you didn't fix them, now you're going to have to fix them with licensed contractors. So once you're under the contract, the custom is that licensed electricians and licensed plumbers and licensed HVAC people need to come in. No more using the handyman. So if there's something that you're aware of that you can repair sooner than putting it on the market, I would try to do that as soon as I can. I keep my receipts from anything that you've done, so that if it does come up on the inspection, that you can say, hey, I did this and I did it legitimately, because a lot of questions are asked. So I also tell everybody that you'll send 3 inspectors in there, they're going to find totally different things. Everybody's got different hot buttons. And so doing a pre-home or pre-sale inspection, to me, I agree with Lucas, I would spend my money elsewhere, because Lucas is going to find certain things. Other inspectors aren't as thorough. They may not find what Lucas finds. And then you've spent time and money on things that aren't even issues for the buyer that decides to buy your house. So I would just caution you to prepare your house and keep all the receipts that you have so that you can explain how you fix things.
Okay. So looking at that, the attorney review, inspector review, that 5 days, looking at it again from the buyer's point of view, I'm wondering, Jennifer, Lucas, really anybody, what are some red flags? Like, what are the normal things that come up, but then what are the things you should be wary of if you encounter in your process?
So I'll jump in and I'm sure someone can elaborate a little bit more on it. No house is perfect. I've yet to be in a house where I walked in and I was like, I don't have to write a report. New construction, obviously they go through, the city inspections, and those are usually really good. And I'm just nitpicking things. And you're making sure you go through your due diligence by inspecting a new construction house, just to make sure that you're going through the process and, the contractors did everything that they're supposed to. So the home inspection process as well is a visual, non-invasive inspection. So there's a lot of the aspects of the house that are not seen during an inspection process. But having a home inspector who's thorough and really goes through the property as thorough as possible. I think the big things that tend to slow up a transaction, and you'll hear some people talk like deal killers. In my eyes, there's very few things that are deal killers. There are things that slow up the momentum because they're big enough concerns, but money fixes everything. Structural issues, money can fix it. It's whether or not that purchaser, the buyer, can anticipate those costs. So the things that I say slow up momentum, typically, I think the biggest one is structure issues. Fortunately for us, we're not in California or on tectonic plates where we don't really see much movement. We do see it, but it's somewhat rare to see structural issues. But those would for sure be commented on in a home inspection process in the report. So structural, I think mold and asbestos, depending on where those materials are. And it's kind of interesting, mold and asbestos are excluded from a home inspector's contract that a home buyer signs, but all home inspectors look for and typically know how to identify it because things can be behind walls or there's so many materials where asbestos was used, we can't test them all. But I think mold and asbestos in certain areas. And then the age of the mechanicals. I usually say this is like the guts of the house. If people are purchasing a house and the roof is old, well, roofs are very expensive. So start budgeting for that. And then when the furnace, AC, water heater, and the electrical panels sometimes have issues, if you have all of those things going against you, that's difficult for any home purchaser, whether it's their first time buying a house or their third, unless you can anticipate those costs. So I think those items, those tend to be the ones that cause for concern or at least slow up the transaction in regard to, okay, we need to make sure that we can afford these very near future repairs if they come up in the inspection process. Touching a little bit back on radon, because radon is becoming so common to test for, in my experience, if a house tests high for radon, it's typically the sellers that will install the mitigation system. And they're not crazy expensive anyways, like $1,500, $2,000. But because it's considered health and safety, and I'm sure Jennifer will touch base on this, health and safety, that gets pushed to the front of the line as far as negotiations. In the real estate contract, and Aaron, I'm sure, can touch on this, if a system is old but it's still working, you typically can't ask for it if it's working as intended. So that's where things like home warranties may come in if all the equipment's old, things like that. But if it's health and safety, those are going to be the ones that get pushed to the front of the line.
Okay. Did anyone else want to chime in?
Yeah, I just want to add to that in terms of the health and safety issues, because I've occasionally seen it where, maybe somebody did not get an inspection, then the appraiser goes out and anything that's considered a health and safety issue is going to have to be addressed. So it could be anything from, I'm trying to think of some recent ones.
GFIs.
Pardon me?
I said GFIs.
Yeah, or exposed wiring, or I had one recently with a I think it was an illegal basement kitchen, and the underwriter wanted the stove removed. So there's just various things that'll come up. If you're going FHA, it can be lead paint is a big issue. You know, is the property old? Could there be lead paint? I mean, there's a number of different things that could come up that then do have to be mitigated for the mortgage purposes. So they're not just cosmetic issues.
Yeah, even like if you have termites or old termites and you're getting a VA loan, which is for veterans or people in the military, they need a certification that, you know, there's no active issue with wood-boring insects. So that's something that Lucas would find, like that there might be an issue, but then on top of that, that type of loan will need a special, you know, will need basically an exterminator to come out and take a look at it.
Okay. So I'm wondering if you can touch a little bit, Erin, on what it's like to tour a property right now with pandemic precautions.
Well, it's a heck of a lot less scary than it was a couple months ago, at least for me, getting a vaccine. So that's been a huge stress relief, I think, for a lot of people. A lot of people I'm meeting with are vaccinated, and I think that it's just like it changes the mentality in certain respects for people. But however, everyone's wearing masks. You know, generally you don't want to touch everything that people are in people's homes, and there's hand sanitizer out, and, you know, like normal, you take off your shoes or put on booties, and, you know, really just try to make sure that people are serious about going to see that house before you step into it. It's not just, you know, like it was a couple of years ago, going to see a house because you're curious. It's because you're serious and you want to go take a look at it. But I think generally that it's better for everybody. You have people who really want to, you know, purchase and have done their research before they're going out and seeing it. And, you know, you limit how many people are there generally, because you just, you know, more people, the more risk. And, you know, a lot of times some brokerages will make you sign a disclosure about COVID and say that you have not traveled outside the country, you don't have COVID knowingly, you don't have a high temperature, all those types of things. I don't know how enforceable it is or whatever, but, you know, several brokerages do require the buyers and the agents to sign that before going in. And there, you know, for a while, there weren't any open houses, and there were virtual open houses, which I think are a good idea. But people are doing open houses again, not to the level that there was. And also, just because things are so busy right now, you might be in line to go into a house for going in for a showing. So it's just like, it's very in demand, and you're taking a little risk, you know, but if you're serious, you're going to be out there and going for it. One thing I'd also add is that there's a lot of different things that you can do in a competitive situation like this to improve your chances of getting the offer. People write letters. I mean, one thing that I like to do, you know, depending on the situation, I may write a letter and say, I've got a great team behind me, and these are all the people that are going to be working on this transaction, and it's going to be easy. And it's really written to the listing agent to get them to convince their client to take my client's offer. Or the buyer themselves may write a letter and talk about how much they're going to love the house, and, you know, whatever the situation may be. Another thing that Diane can touch on is, you know, people are waiving their appraisal contingencies up front. You don't actually have a definitive contingency if the appraised value is not this contract price, but a lot of times attorneys will add that in. But a lot of times people are saying, look, if it doesn't appraise for what I'm buying it for, I'll pay the difference, because the bank isn't going to pay that gap. So people are taking risks. Some people are waiving their right to an inspection. They're buying it as is so they could have an inspection, but they're not going to ask for anything. So people are, as a buyer, you might be taking more risk, but at the end of the day, you want to get the house. So that's, you know, just some of the things to add.
All right. So we had a question that came up from the registration list of what is the process to buy short sales and foreclosures, and how does that compare to regular sales? So I don't know who wants to chime in on that one.
Well, I could just say like in general, and I could pass it off to everyone else, but the process of buying short sales and foreclosures is a little bit different than a conventional sale, and there really haven't been as many as there used to be. You know, a lot of loans where people couldn't pay their mortgage over the past year, they've gone into what's called forbearance, where they don't actually have to pay right now, but it's tacked on to the end of the loan. So if that expires, they may go into foreclosure. So just to get to the question, a short sale is when a seller owes more on the loan than they're going to get from the sale of the property. So what they do is they have to negotiate with their lender to allow them off the hook for whatever is left over. A foreclosure, I don't want to get into the technicalness of it, but a foreclosure is really typically a real estate owned property, a bank owned property. And the bank has already taken the property back from the owner, and then they're selling it. Short sales are more complicated because you're still dealing with the seller. You negotiate with the seller, then they have to get it approved by the bank. Then there might be another round of negotiations. I've had situations where things close after a month. I've had situations where we wait 9 months and the deal doesn't go anywhere and it falls through. So short sales are not fun, but you can get a big discount. Foreclosures are actually a pretty straightforward process. You just have to fill out the different forms that the banks require. You're just dealing with a company and you get a great deal. So I've had several clients get great, fantastic deals on foreclosures over the years. And I'm sure there's a lot of investors who would love to get their hands on some foreclosures. So that's pretty much it. But I mean, Diane and Jennifer can talk to it, and even Lucas, just in terms of like quality of things when you go through it on inspection.
One of the things I've seen, yes, that the length of time with the short sales, it can sometimes drag on months because again, the sellers are negotiating with their lender because the lender's going to take a loss on this. And, you know, also with foreclosures and sometimes with short sales too, if people didn't have money to pay their mortgage, they're also not paying to upkeep their house. So there could be a lot of inspection issues. There could be, there have on occasion, I mean, people have pulled out the plumbing, pulled out, you know, the fixtures, pulled things out. You're not going to be able to get a mortgage with that. And typically the bank is not going to pay to fix anything. They're already taking a loss. They're not going to fix anything. Jennifer, I'm sure, can speak to this, but even some of the typical typical costs that the seller usually pays, you know, like transfer taxes or something else. Sometimes in a foreclosure, the bank won't pay those. It'll be in the contract that the buyer now has to take on fees that are traditionally things paid by the seller. So, you know, I think it's probably great if you're going in there with, and you've got cash and you can buy it, you can fix up whatever maybe needs to be fixed, and then get what's called delayed financing afterwards, where you can get a cash out mortgage within this, you know, go in, pay cash, fix it up, then pay yourself back with a cash out mortgage within 6 months rather. But not too many people have the ability to do that.
Yes, there are other costs associated with foreclosures and short sales that people do not realize. So I agree with you, Diane. And I think that I haven't done a lot of short sales and foreclosures recently because the market's been really strong. I was doing a lot, you know, a few years back. And, you know, you'd see short sale approval. Okay, we're going to accept your purchase price, but we're not paying for title and survey and anything else. And so, and we're not going to give you tax credits either. So now all of a sudden, I don't know if it's such a good deal because you came up with some, you know, maybe that's several $1,000s is what you thought you made on the purchase price. And now it's not. So I do think that comes into play, and also the timing of things. With foreclosures and short sales, you're generally taking them as is. There's no opportunity to negotiate credits. So Lucas giving you all that information about the inspection becomes very important when, I think it was him who, I don't remember if it was Aaron or Lucas who said at the beginning, we want you to go with your eyes wide open. We want you to know and be able to anticipate the costs of maintaining this home. With the foreclosure and short sale, you're starting off with things that may not have been attended to because, like Diane said, if they're not paying their mortgage, they're probably not having the HVAC serviced every year. Those kinds of things. The other thing that can happen on short sales and foreclosures is condo assessments or association dues aren't paid, and you have to negotiate with the association on how that's going to track. So there's a lot of different moving parts when you're buying foreclosures and short sales. And I also want to I just want to say this in general, because we've given a lot of very specific advice, and the advice on real estate deals is very specific to your contract and your situation and what's happening at that moment. And so this is very generic. I don't want somebody to take what we're saying and use it for a transaction they're involved in right now. They should be talking to whoever their lawyer, their realtors, their lenders are, or their inspectors are. These are just general comments about the process. So I do want to keep that in mind as we've gotten to be a little bit more specific in some of our answers.
That's excellent. Yeah, and I think seeing that it's now 8:32, I think that brings us to a good spot to wrap up with that reminder, as everyone shared earlier, that think of your realtor, your lender, your attorney, your inspector, they're your team, and go to your team for the advice for your specific context. I think, like, if that's the major thing to walk away from, that feels like a good place. So I want to say again, just a big thank you to Aaron, Jennifer, Lucas, and Diane for being here this evening and sharing a bit of overview from their perspective and experience, and also taking these questions. We'll work on getting the recording up on the event page for the library's website in the next couple of days. We just need to make sure we sync the closed captioning so it's accessible. And if you have any other thoughts or questions about library events that you'd like to see, please don't hesitate to let us know. And thanks again to our presenters, to Lina for making sure the tech worked, and for all of you for being here. Have a great evening.
Thank you, everyone.
Thank you, Amy.
Thanks so much. Take care.
Thanks, guys.
Good to see you all.